Picture this, a Navy veteran sits across from me at my desk. 12 years of service, 2 deployments, came home, did everything right. Got a steady job, started a family in Rhode Island. 2 years ago, he and his wife bought their first home. They put $42,000 down, drained almost their entire savings to do it. And he's paying $280 a month in mortgage insurance on top of his regular payment. He sits down in the chair and asks me, PJ, did I mess this up? Because my buddy at work just told me I could have done it with nothing down and no mortgage insurance. I had to tell him the truth. Yeah, he could have. $42,000 still in his savings account, $280 a month, that's $33.60 a year, back in his family's pocket. He's served this country for 12 years, and nobody, not his lender, not his realtor, not a single person in that transaction told him about the benefit he has already earned. His service was his down payment, and no one told him. If you're a veteran in Rhode Island, Massachusetts, or Florida, and you've been told VA loans are complicated, or that sellers won't accept them, or that you've already used yours, so you're done, you've been lied to. And it's probably costing you tens of thousands of dollars. I'm Paul Byron, a mortgage broker licensed in Rhode Island, Massachusetts, and Florida. I've been doing this for 25 years, and I'm going to walk you through exactly what a VA loan actually is, why it's one of the most powerful financing tools in the entire mortgage market, and 5 myths that are keeping 85% of eligible veterans from using the benefit they earned. If you like straight-to-the-point content built for veterans and the hero professionals who serve communities, hit subscribe, turn on notifications so you don't miss the next one. Let's get into it. Okay, let me break this down for you. A VA loan is a mortgage backed by the U.S. Department of Veterans Affairs. The VA doesn't actually lend you the money, a lender does, but the VA guarantees a portion of the loan, which is what unlocks all the benefits we're talking about. Now, it's designed for veterans, active duty members, certain National Guard and Reserve members, and in many cases, surviving spouses. That's roughly 30 million Americans who are eligible right now. This is not a small niche program either. This is one of the strongest loan options in the entire market, and most people who qualify for it don't even fully understand what it does. So let's fix that. Here's why this type of financing really starts to separate itself from every other loan out there. Number one, zero down payment. Most loan programs make you come to the table with money. Conventional loans are typically 5% down, sometimes more. FHA wants 3.5%. Even those low down payment programs still want something. On a $500,000 home in Rhode Island, which is around our median price right now, a 5% conventional down payment is $25,000. FHA, $17,500. But with a VA loan, zero. You can buy that house with $0 out of pocket toward the down payment. Number two, no monthly mortgage insurance. This is one that quietly costs veterans the most over time. On a conventional loan with less than 20% down, you're paying PMI, private mortgage insurance. On an FHA loan, same thing. Either way, you're paying a couple $100 a month for insurance that protects the lender, not you. VA loans have no monthly mortgage insurance, none. That means the money stays in your pocket every single month. On that same $500,000 home, that's roughly $200 to $300 a month you're keeping in your pocket. Multiply that by 12 months. Then again, multiply that by 10 years. That's $24,000 to $36,000 over a decade, just from not paying mortgage insurance. Think about what you could do with that money. Home improvements, saving for college tuition, or even a well-deserved vacation. Number three, typically lower interest rates. Because the loan is backed by the federal government, VA loans usually come in at a lower interest rate than conventional loans. Sometimes a quarter point, sometimes a half a point. On a $500,000 loan, half a point is roughly $150 a month, and tens of thousands over the life of the loan. Number four, flexibility. And this one doesn't get talked about enough. VA loans were designed for real people with real situations. If your income isn't perfectly straightforward, maybe you went from active duty to civilian work last year, VA underwriting can work with that. Let's say your credit isn't perfect. VA is more forgiving than conventional financing, and there are no strict debt-to-income ratio cutoffs the way conventional loans have. The program was built for people who served. It was not designed to shut them out. Here's where it gets crazy. There are roughly 30 million Americans eligible for a VA loan right now, yet only 10 to 15% of them actually use it. Let that sit for a second. The majority of people who earn this benefit, who put on the uniform, who deployed, who sacrificed years of their lives, are not using the one financial benefit that was specifically designed to thank them for that service. And it's not because they don't want a house. It's not because they can't qualify. It's because nobody ever explained it to them the right way. So let's break down exactly why veterans aren't using it and why every single reason is wrong. Myth number one, thought I could only use it once. Not true. You can use a VA loan multiple times as long as you have entitlement left. I have clients on their third VA loan. As long as you paid off the previous one or have remaining entitlement, the door stays open. Myth number two, I need perfect credit. No, you don't. VA is more flexible than most conventional loans. I've closed VA loans for veterans with credit scores most banks would have laughed at because banks have one set of rules. As a broker, I can find a lender whose VA guidelines actually fit your situation. Myth number three, sellers won't accept VA offers. Now, this used to be a bigger concern back in the day. Today, with a strong offer, a strong pre-approval, and a team that knows how to package the deal, you're fine. I take great pride in the fact that I've never lost a VA offer because of the loan type. Myth number four, the property does not qualify for VA financing. Again, most times if a property is eligible for FHA financing, then it also qualifies for VA financing. Myth number five, and this is the biggest one, I didn't think I qualified. People guess, they assume, but they never actually check. If you served active duty, guard, reserves, even certain surviving spouses, Pick up the phone. It costs you nothing to find out, and the answer might be worth tens of thousands of dollars to you and your family. Now let's get real for a second about where you take this loan. If you walk into a bank, you get one option: their VA program, their guidelines, their rates. Take it or leave it. That bank might be great, or they might be the lender that turns down 30% of VA applicants for reasons another lender wouldn't blink at. When you work with me as a broker, I shop multiple lenders who specialize in VA loans. I structure the deal around your situation, your income, your credit, your goals, not around whatever box one bank wants to put you in. This matters more on VA loans than on almost any other product because VA guidelines are interpreted differently by different lenders. One lender's no is another lender's easy approval. If you don't have somebody shopping the deal for you, you might be sitting at home right now thinking you don't qualify, when the truth is, you just talked to the wrong bank. The flexibility is the difference between getting approved and getting shut down. One more thing before we wrap up. At South County Mortgage, we have a program called the Shining Star Hero Program, and it's built specifically for the people who serve our communities: veterans, active duty military, first responders, teachers, healthcare workers, and law enforcement. It's not a marketing slogan. It's a real set of benefits we layer on top of programs like the VA loan to make the cost of home buying meaningfully lower for the people who've earned it. If you fall into any of those categories, and especially if you're a veteran sitting on a VA benefit you've never used, this is a conversation worth having. So let's bring it back to the Navy veteran from the start of this video. He didn't make a mistake because he was careless. He made a mistake because nobody told him the truth. If you served, your down payment might already be covered. The real question is, are you actually using the benefit you earned? Are you overpaying every single month because nobody explained this to you the right way? If you even think you may qualify, reach out. I'll run the numbers, walk you through our Shining Star Hero program, and show you exactly what this could look like for you. No pressure, no guessing. Remember, your service is your down payment. So let's put it to work. If this video helped, do me one favor. Hit that subscribe button and share it with a veteran in your life who needs to hear it. Somebody you served with, somebody at your VFW, somebody at work. That one share might put that thing that puts $40,000 back in their pocket. I'll see you on the next one.